So when you look at those businesses, is it you look at it and go, okay, like because 45 years old, and it sounds like, and it's under a million EBITDA, sounds like it has a good foundation, but for whatever reason in the history of that business, they haven't learned how to scale or they have no motivation to scale. Now, when you find that opportunity, are you looking at it and going, oh, I already have all these ideas that we can put in place that will take it to that next level? Or do you have a self-confidence that you can figure it out after you've acquired it? Basically, what I'm asking is, do you have a long-term vision before you acquire?
In this case, no. It was I could figure it out, and they were small enough to where I'm like, I know what they do. There's a demand for their service. We just got to market it right, professionalize it, get it on the platform, and it's a low risk acquisition. And a lot of those don't happen. I've looked at hundreds of acquisitions to close none of them until this one, and so it was kind of an opportunity, but definitely a figure it out. I didn't have like a grand 5-year, 10-year plan for the business. It was more I understood it, but the risk was so low that the figure it out factor kind of convinced me we were able to get over the risk.
So in that mindset, it was like, it was low risk that you'll lose your money, but you may not make any big money.
Correct. Yeah.
But
Like, it's not going to be some total loss. It's not going to be a big financial loser. But we can figure this out. And the upside was far greater than the downside. It was kind of at its floor already, in my opinion.
And how often is that what you normally do for all the acquisitions or all you're doing, or is it more strategic? Like, I guess what I'm asking is, how do you strategize on what you're looking for other than just under a million EBITDA?
Strategic as well. As a new brand, I love the idea of buying recurring revenue. So we look at similar companies, what we do now, maybe that support a different aircraft platform than we do, but have had a long lasting recurring revenue model. And so the ones we're looking at right now, there's 2 of them, and we want to do about 1 a year. We want their capacity, but that's not as important as buying their customers. So we do look at ways to grow our top line by acquiring a customer base through acquisition. So that would be our focus probably the next couple of years as we're ramping up our new business. That kind of became the focal point, because we can build a ton of capacity here, but the path to building recurring revenue is slower for us just because we're a young business.
I like that model, the below million EBITDA, because you're not competing with family offices and private equity firms. You're competing with individual investors who may not be properly capitalized, and don't have the business that you have and the ability to connect. So I like that strategy. If you're buying businesses that are not really positive cash flow, how are you structuring deals?
If they're not positive cash flow, we won't touch them. So you got to make a dollar.
You got to make a dollar.
Like I convinced myself, because I think I can fix everything. That's my problem too. Is every aviation company, because I've grown it. Sometimes I'm naive. I'm like, oh, we can fix that. It should be doing $1 million a year, not losing 500,000. We've said it needs to make a dollar. If it makes a dollar and covers its expenses, the risk is low. But we are competing with a lot of independent sponsors that may step in the space. And I tried this. So I actually spent a little bit of time trying to acquire a business instead of starting it. And it took too long. Like, I am not built for that world. And I love the fact that we have Jets MRO. So I can go into an acquisition and say, look, here's the structure. Here's what we're going to do. If you like it, great. If not, I'm just going to go back to growing my Jets MRO business. I'm around aircraft, doing what I love. Awesome. When I didn't have that, it was very hard for me. And I really understood how hard it is to be a sponsor, because when you don't get that deal, it's back to square zero. You don't have, my identity is in running and growing a business. And so I love this setup better, kind of having a platform and being able to go into a business. And I'm really open about it. I'm like, hey, I think it's worth this. This is what I use to base my valuation. It's not me negotiating. If you're interested, call me. You might get other deals or want more. Usually everyone always wants more cash, things like that. But here's how I structure it. Here's why. Call me when you're ready. And a lot of them will go shop, but usually they come back and entertain us because we have a platform, reputation, and we can close. The certainty to close is what I try to sell folks.
Absolutely.
I've seen hundreds of deals and closed one. And I tried to do this as a sponsor, and it was so painful. In terms of, I just didn't have the patience for it, that I love the fact that I can just go be transparent, put little time into it. And look, we'll put the time in if it's a good fit for you, but I have my platform I can go back to, which is awesome.